Hello everyone, I am CA Divya Khosla and we are in conversation with CA Pramod Jain. So today we'll be discussing on the topic loans and deposit under the Companies Act. So sir, we have listed 12 questions for you. So let's get started.
Thank you. Thank you, Divya. Namaste to all. Yeah.
So the first question is, what are the provisions that one should take while giving or taking loans?
Uh, yes, Divya, if I talk about for giving and taking, if I talk about for uh, loan to be given by a company, then they should look for section 185 and 186 of the Companies Act. And for taking, they have to look into the deposit section 73 to 76A plus section 180 for other than private companies, and also section 185 for taking the loan, so that there is no non-compliance while receiving that loan.
Okay. So the second question is, can all company take the loans from their directors or relatives?
Yes, uh, any company can take a loan from their directors if it is from their owned funds. They cannot borrow and then give it to the company. For that, they have to give a declaration. As regarding loan which can be taken from a relative of a director, only a private company can take loan from the relative of the director if it is out of its own funds. A public company cannot take so. So again, the relative of the director, they have to give a declaration that it is not a borrowed fund but a owned fund.
Okay. And can these loans be interest free?
Yes, a company can accept any loan from any director or their relatives which are interest free. They can take it.
Okay. So the next question is, can a private limited company take loan from a partnership firm where a partner of the firm is also a director in that company?
Good question, Devya. Uh, a company cannot take a loan from any firm in which the director of that company is a partner, because loan can be taken only from the director or their relatives, but not from a firm, unless that firm could be a shareholder, but the firm cannot be a shareholder, hence it cannot be taken.
Okay. Can a company give loan to a firm or a LLP where the director or his relative is a partner?
To a firm, a company giving a loan to a firm. If I talk about this is controlled by, I would say, section 185, which restricts that the director of a company, if he is a member or that is a partner of a partnership firm, uh, loan cannot be given to that firm, unless of course it is an exemption which is covered under the notification dated 15th June 2015. If the company is covered under that section, that exemption notification, in that case only the exemption is given, otherwise it cannot give to a firm.
Right. Okay. So the next question is, can a company give interest free loans?
Yes, this is again a very, very important question. Normally, a company cannot give an interest-free loan because that is governed by Section 186, subsection 7 of the Companies Act, that they have to give it at least at those rates, 1, 2, 3, 5 years, 10 years, which is yielding the government yield. Unless the company itself is exempt under Section 186, the whole section. Otherwise, when the loan is given and it is covered under Section 186, then interest has to be charged even if it is given to its subsidiary. So interest is to be charged.
Okay. So can a company give loan to another company, both having common directors?
Yes, there was a restriction earlier that it could not give, but now after the amendment under Section 185 of the Companies Act, one company can give a loan to another company in which the director of the giver company is a director or shareholder in the other company, uh, if that giver company passes a special resolution.
Okay.
If they have to pass a special resolution, and when it is filed with the registrar, then yes,
Then they
after
can
that
give.
they can give.
Okay. And can all companies take loan from their shareholders?
Yeah, Divya, if I talk about this is one of the most important questions. Uh, a company, whether it can take loan from its shareholders or members, there are certain restrictions or certain limits under which it can take. A general limit for all companies is yes, they can take up to 35% of their paid up capital, free reserves, and securities premium. But again, there are restrictions. Say, I would say for an eligible company, a public company having the turnover and the borrowing limit, public companies, in that case, the limit is they can take only 10 up to the 10% of securities premium, free reserves, and paid up capital, free reserves, and securities premium.
Okay.
But if I talk about specified IFSC public company or a private company, any private company, in that case, the limit is up to 100% of their share capital, free reserves, and securities premium. However, there is no limit in case of a private limited company, which is a startup company. Up to 10 years from the date of its incorporation, they can take a loan from their shareholders,
Right.
Without any limit.
Okay.
And the same thing is there even for a private company which satisfy all the three conditions. All the three conditions, that it is neither an associate or a joint venture of any other company, or it is associate or subsidiary of any other company, and its borrowing from the banks, financial institutions, and body corporate does not exceed 2 times of its paid up capital, or rupees 50 crore rupees, whichever is lower. And third, the such borrowing from the bank, financial institution, and body corporate, there should be no default into that. If all the three conditions are met, in that case, it can give unlimited. It can take unlimited loan from their shareholders.
So the next question is, if a company takes loan from its shareholders which is within the limits, so is there any further requirement also?
Yes, Deva. Again, this is very important. Loan is taken by a company from its shareholders. First of all, it is a deposit. So when it is a deposit, then it has to comply with section 73 subsection 2 conditions, A, B, C, D, E, F, G, H.
Right.
From exemption from those exemptions is there. Conditions are there if there is no default in filing of two forms, my annual returns, AOC 4 and MJT 7. If there is no default, but that is given again in that exemption notification, not in the act or the rules. So one is that. Secondly, still apart from that exemption, again certain exemptions are given. They have to still see that the loan is taken within that period, because that is a deposit, that becomes a deposit. Then it has to be for a period 6 months to 36 months, interest bearing, and all those things, and it is a deposit. So form DPT3 is to be filed it as a deposit, not as an exempt deposit. So these conditions are still to be met.
Right. Okay, so the next question is, can a private limited company issue non-convertible or optional convertible debentures or bonds?
Again, Divya, this is again a very, very important question, because when we see there are a lot of private equity is there, startups takes, and everyone takes. Now here, if I talk about non-convertible, it cannot be taken by any company, non-convertible debenture or bonds, unless it is a listed non-convertible debentures. Second, if I talk about, if it is a fully convertible debenture or bond, then it has to be converted within 10 years. It cannot be beyond that. And in case of an optionally convertible debenture, it has to be secured by the first charge of its assets of the company. And the value of the first charge of the assets should not exceed the debenture bond value.
Okay.
So these conditions, if these are not met, then these all becomes a deposit, and the violation of deposit is there.
Right.
Deposit rules is
Okay.
there.
Okay. So the next question is a company required to file DPT3 if it only has a loan from its directors?
Yes, normally the way what happens that people feel that if I have taken a loan or deposit only, then I have to file DPT3. But yes, if I have taken a loan from a director or director's relative only and no other further loans, still I have to file that annual DPT3 form.
Okay. So the last 12th question is, if a company has only vehicle loan which is taken from a bank, is DPT3 required to be filed there?
Yes, Divya. Again, no other loan from directors or banks, but only say taken from NBFC. Apart from the charge which is to be created, the annual DPT3 form is required to be filed by 30th May every year.
Right. Okay. Thank you so much, sir, for the enlightening information. Thank you.
Thank you, Divya. Thank you, everyone. Thank you.
Thank you.